I will use the format of my cash flow to drive my answer. So I am going to 4 separate sheets of paper, and I'm going to open up operating activities. I'm going to another sheet of paper, and I'm going to open up investing activities. I'm going to another sheet of paper, and I'm going to open up financing activities. I'm going to go to another sheet of paper, and I'm going to open up workings. Now, if I can get away with short, simple, easy workings, then I will just do so on the face of my answer. But yeah, I have opened up my basic workings, and so I have my basic sheets of paper. So I have here operating, investing, financing, and workings, sort of all pre-prepared. And I know the format of my cash flow, so I know that I want to start with profit before tax. If I come across anything difficult, I'll just carry on. If I come across anything that I'm not really sure about, I'll either guess or I'll leave a space. I want to get to the end of the question, then I can come back and reflect. So, first things first, what's the profit before tax? 486. I'm looking at the P&L for my inspiration. And in the P&L, there are 2 very simple adjustments. So the first thing that I always do is simply reverse out those numbers from the P&L. You start with profit before tax, and then you adjust for the finance costs and the income from the associates. The interest that I've paid will be later, and the dividend that I've received from the associates will be later. What do we do next? Depreciation. That'll do me. Where is depreciation? Note number 1. How much is depreciation? 907. Now, whilst we are at note number 1, we may as well read it. Depreciation is 907. There's been a disposal of plant for 854, and the plant had a profit or loss? Profit or loss on disposal? Profit or loss on disposal? Profit. Profit. Come on, how much are you selling it for? 854. What was the carrying value? 305. So you're selling it at a profit. Add back the loss, add back the loss, add back the loss, add back the expense. Well, this is not an expense, so deduct. I don't see the need for a fancy working. Tell me about this number. What does this number represent? Proceeds, yeah? Cash in or cash out? Cash in. Operating, investing or financing? Investing. I've already opened up an investing activity. Proceeds A54. Going, going, go. Proceeds A54. Going, going, go. Right, back to the script, back to the sequence, back to the order. Can you think of anything for me to do? Because if we can't think of anything for me to do, I will leave some space and start doing changes in working capital. I will start dealing with inventory, receivables and payables. But you might be aware of other things here, I don't know. But if you are, you have to tell me. I'm hearing current service cost. So this requires a sophisticated knowledge of ISA 19. This requires you to have a look at the information in paragraph number 3. I think you have a sophisticated knowledge of pensions. We have a defined benefit pension scheme. The company is given a guarantee. Because we've given the guarantee, we have an open-ended liability. And what you are presented with there is the reconciliation. You recognise that when we do our pensions, we reconcile the net deficit. And we have, as a result here, all the information that we need. The expenses are debits to P&L and credits to the liability. So it's absolutely right. The current service cost is a non-cash expense. And I don't think we need to do any form of working. I just think we put in here 560 as your current service cost, and we add that back. Is there a cash payment? How much is the cash payment? 100. The company makes that payment. Now that's an operating payment. I'm going to leave some space because I'm going to have here later on something to do with my inventory, something to do with my receivables, and something to do with my payables. And then after I've dealt with that, after I've dealt with those, I will then have my interest paid, and I will have my taxation paid, and I will have my pension contribution paid. And I know my pension contribution paid, and I know that my pension contribution paid has been given to me at note number 3, and the pension contribution paid is 100. So my operating cash flow, the indirect method, is busy. I've left some space so I can fill in some more gaps. I know that there will be the changes in the working capital, whether inventory, receivables and payables, but then at the very bottom of the cash flow, at the very bottom of the operating activities, you then have your cash flows themselves, which is interest, tax and pension contributions. And then that'll be it. What should we do next? I mean, what I like to do, if at all possible, is to be fairly systematic and to, keep going down here. And, okay, I got distracted, I did the proceeds there. And, okay, I got distracted, I did the payment to pensions. But I'll keep coming back and being systematic. Now, presumably you're not telling me anything else here, which is fair enough, but we've left some space just in case. I need to look at inventory, I need to look at receivables, I need to look at payables. Now, let's just be cautious about this for a second. And let me tell you that my opening inventory is 7624, that my closing inventory is 9749. So let me tell you that if I was teaching you F7, I would simply say 2125. I would simply say there is an increase in inventory of 2125. And that would be my full story. Stock goes up, cash goes down. Why can't I do that here at P2? Because you've read the question. Where is there a story about inventory? Ah, yeah, 2 stories. Note number 4, you bought a sub, so inventory goes up. And note number 5, there's an exchange gain. So I've got a working. So I'm going to do a working here in respect of my inventory, my receivables, and my payables. So this can be my first working. And if I do the potential for batch processing, yeah, we might be able to gain some time here. So let me do the inventory first of all. When I look at the inventory in the question, the opening inventory is 7624. When I look at the inventory in the question, the closing inventory is 9749. But when I have my wits about me, I am conscious of note number 4 because I have acquired a sub, and when I acquired a sub, the additional inventory was 612. I'm also conscious of number 5, the exchange difference, and there is a gain on the exchange difference to do with inventory, which is 116. So when I think of my inventory, it is 8352. But in fact, the inventory is 9749, and therefore I have, as a balancing figure, 1397. Now looking at the inventory, that balancing figure is an increase in inventory. Stock goes up, 1397. Stock goes up, 1397. Stock goes up, 1397. So there is an increase in inventory of 1397. Is an increase in inventory good or bad for cash? Bad for cash, yeah. Yeah, it doesn't really affect profit, but it does affect cash. So it's bad for cash, 1397. 2 minutes. Can you do receivables? Can you do payables? 2 minutes.